there is a major, have I said that enough? Pattern shift that is occurring right now. And that is a really big indicator, especially with all the problems in the banking system that we can't even see, but we will be seeing it. And I don't know when, but I don't think we have too much longer to go.
Welcome to a critical exploration of the financial world as we know it. Today, we uncover a monumental shift that is set to redefine our economic landscape. This isn't just another update, this is your roadmap to financial resilience. From the end of the gold standard in 1971 to the rise of debt-based currency, we're entering an era of profound change. We'll dive into why this 53-year-old trend is ending, the implications for your investments, and why gold and silver are more relevant than ever. Join us as we decode the financial noise, highlight the strategic importance of tangible assets.
There's actually a major pattern shift that indicates the end of a 53-year-old trend. And why is that 53-year-old trend so important? Because it takes us all the way back to 1971, when we shifted from at least a quasi-gold-backed currency into a pure debt-based currency, with the central banks controlling the debt and the interest rates. That is huge. Now, what are bonds? Okay, because this is gold's return in 50 years exceeds bonds. Now, of course, they're looking at it in yield, and that is really important. But what is a bond? A bond is debt. Why do you care about that? Because that's how money is created in this system. How is it supported? The full faith and credit of the government. So let's translate that. As long as you trust them, you have faith. Well, you will continue to loan them money, extend them credit. And this is showing you that that whole piece, the government's ability to support the currency by creating more debt, is gone. Now, from 1971, fiat money has been created from debt, like I just showed you. A properly diversified portfolio, because all of those intangible assets are predicated on the value of this underlying currency, and that is shifted.
Lynette Zang explains that the foundation of our monetary system lies in the government's ability to borrow and promise repayment, which is backed by the full faith and credit of the government. This means as long as people trust the government's ability to repay its debts, they will continue to lend money and extend credit. However, Zhang points out a concerning trend: governments worldwide are accumulating substantial levels of debt. This excessive debt, according to her analysis, threatens the stability of the economic system. It could erode trust in government finances, potentially leading to a crisis where the burden of debt becomes unsustainable. Zhang argues that this situation underscores the importance of diversifying investments into tangible assets like physical gold and silver. These assets, she believes, offer more stability and protection against the risks posed by excessive government debt and potential economic instability.
Physical gold and silver, this is sound money. It is so critical for you to have a sound money strategy and portfolio, along with the other pieces that can ensure or assure that you can retain and maintain a reasonable standard of living. Food, water, energy, security, barterability, which for me is primarily silver, though anything, silver in any form, right? Food, water, energy, security, barterability, wealth preservation, community, and shelter. Get it done, get it done. That's what this is showing me. The safe haven of choice has become gold. Wow, isn't that interesting? Because guess what? That's been the safe haven of choice for thousands of years, and why you see central banks accumulating it the most and the fastest level in history since they started tracking it. Here's another thing to prove that the shift had occurred. The bond gold return ratio breaks a decades-long support line. How about going all the way back to the 70s again? Can you see this? Everything is full circle. I don't know why I'm basically the only one that talks about a currency life cycle, but everything has a life cycle. This is not rocket science. I do not look the same as my 9-year-old granddaughter looks. I don't look the same as my almost 11, I'll be next week, 11 years old, my grandson. I'm going to be 70. You're not looking at me and saying, I bet you're entering your teen years. Nor are you looking at them and going, boy, I bet you're going to be 70 years old soon. No, everything has a life cycle. If you can understand what it looks like in each one of those parts of that life cycle, then you can determine what is the next most likely outcome. No doubt about it, not one little teeny weeny doubt in my mind, we are at the end of this huge experiment. And let me tell you, when we come to an end of something that has gone on for 100 years, it is violent. It is not a soft landing. That is garbage. And everything I've been showing you has been the breakdown in the banks beneath the surface that you can't see. How are you holding your wealth? Are you holding it in the stock market? Do you have ETFs? Do you have mutual funds? Do you have a 401k? Do you have an IRA that's in mutual funds or annuities or any of that other stuff? Because remember, if bonds are in a structural bear market, negative market, that means this stuff is too.
Lynette Zang emphasizes that everything in the financial system has a life cycle. Understanding each phase of this cycle helps predict the most likely outcomes. She firmly believes we are nearing the end of a massive economic experiment that has spanned a century. Zang warns that transitions from such long-running systems are typically violent, not smooth. She highlights ongoing crises in the banking sector, largely unseen by the public, as indicators of underlying instability. Zang argues against complacency, stating that current events represent a significant pattern shift rather than business as usual. She asserts the importance of holding tangible assets like physical gold, which she considers the safest form of money due to its lack of counterparty risk and inflation protection. Zang critiques traditional investments tied to bonds and stocks, which she believes are vulnerable in the current economic climate marked by structural bear markets. She urges individuals to consider safeguarding their wealth with sound money like gold, citing warnings from major institutions like the Bank for International Settlements about potential sovereign debt crises and market vulnerabilities.